So pissed. Let me see if I can set up a new Zoom session now. All right. Okay, so I set up a new one. Set up a new one. Okay. Go to this current screen. Okay, fuck. All right, so it looks like we are live. Let's just wait maybe a minute or two for people to come join.
Are we live? Oh, cool.
What's going on, everybody? Hello?
Yellow?
Can you guys hear me? I can hear you're clicking.
Yep.
Okay, everyone can hear.
What's going on, everybody?
Perfect. Oh my God. Oh.
It's all
Well,
over.
Well, we had like 20 plus people and the other one man. Stand by with your faces on. Hopefully we can join. All right. New link is functioning. Okay, cool. All right, guys. So let's first get into the crypto market. All right, sorry about the mishap on the link itself. I don't know what the heck was going on because this is my first time trying to operate with Zoom going directly to YouTube. So we just had a bit of a technical difficulty there. But let's get started with a recap on what happened with the crypto markets first, and then Facile and I will discuss equities. So let me start recording here. All right, here we go. So with the crypto market today itself, Friday for what is it, 3:30 p.m., May 22nd. So I stated yesterday, again in the advantage side of the community, that we had been short from way back here, almost around May 12th or 13th. And we are finally in profit on our short, as you can see right there. Doing pretty well so far in our position. And here's kind of the way I'm looking at the market structure right now. We're headed into the weekend where it's kind of like a low liquidity environment. And I typically don't like how BTC looks going into the weekend unless significant structures have been broken. And unfortunately, in this present stage, it just doesn't seem like it. What we've really done is, maybe this is like a wave 5 top right here. This is your A, your B, maybe your C. Your D might come in some point, maybe Saturday or something, your E, and then you might get a breakout to the upside. For this ABCDE pattern to be invalidated, you need this structural trend line right here to get broken. And that is around this area right here. So if we went straight down right now around $8,800, if we went down to break it tomorrow, it'd be like 88.50, 88.75. But once that gets broken, okay, it'll be a very, very quick slide towards this lower area of the range, around 84, 84.50. Even though I am a bear and I still have a bearish bias on Bitcoin, I have not ruled out or counted out the bulls for the last several days or even several weeks, because they've been immensely strong and buying up every dip and every opportunity, kind of like they have in the stock market, which we'll discuss in a little bit. And so, when we have this kind of structure right here, it is still consolidation. I have not, sort of broken out the whiskey or the champagne and celebrating my short just yet, because I want to see more downside momentum and actual follow through from the bears. Let's look at it from the daily perspective here. Let me delete this thing. Pretty good volume on a daily perspective from this red candle to this one, because higher volume, as you can see right there, as well as, big old candle spread. So positive sign nonetheless. We still have about 3.5 hours to go. 3.5 hours to go in this current daily candle. So we'll see, kind of how it closes. As long as it closes, in my opinion, below this 4-hour pivot right here, which again, pivots are just nothing more than, support and resistance levels drawn out by this specific indicator. As long as we close below that, I think we should still at least see another leg towards at least this key area, which is around 89.25. Let me see here. S1 is somewhere around 85.66. So we'll see if we can actually get towards that. But, I still don't want to count out the bulls just yet. We really need to see follow through to the downside. Now, let me just check the stream and make sure everything is fine. Let's see here. Video stream quality, it looks like low resolution. You could actually change the resolution on your end. Let me see here. I'm looking at it from my other laptop, and it looks all right. It doesn't look great, but it's not the worst. Let me see here. So yeah, make sure you guys, hit the thumbs up, folks, just in case, you want to follow these streams and you want to keep watching them. You will get a notification also if you hit subscribe. All right, so let's move on to the equity markets. We have Facile here to discuss the equity side. Facile, what's going on, man?
Not much, man. How are you doing?
Not too bad, not too bad. It's been a very interesting day in the equity markets. One thing I do want to let our members know is, and people who are watching right now, we took on some options trades over the last several days. We had this real, fantastic trade. I think just last week we closed up at about 360 or 400% average on the SPY put, I think just last week. Then we had another slightly, worse loss. Where was it? Not that one. About 79% drawdown in our put. And then today itself, I think we had another small loss at about 5%. So again, the one thing that we try to implore in our community is trying to keep our winners big and our losers small. So, I'll let Facile take it away for the equity side. What do you got, man?
Well, today, in terms of equities, it was a really interesting day because I kind of came in with the assumption that we were going to see a really volatile day. And if you took a look at the futures last night and this morning, it really kind of pointed to that. I think they were down at least 1%. And so I was kind of feeling like, okay, I think the market's going to end up going down and proving its direction finally. And then, of course, as the day played out, it ended up becoming just another flat day like we saw yesterday and the day before. And it really leaves a lot on Tuesday. Once again, you're not going to see the market go up or down 100 points or 200 points or whatever. It's going to make a big move to the upside or downside when it decides to move. Otherwise, it's just going to keep narrowing down and trading in these really flat days. But it's incredible that even in a day that was relatively flat, you had stocks like Coop, yeah, which is a big software name, a software leader, in my opinion. They made an all-time high. I believe there were a couple other stocks that made all-time highs that continue to push the envelope in terms of what investors are valuing in this day and age.
Is
So
this the Coop Software, Coupa?
let me check it out real quick. I have my charts open. Yes, Coupa Software, that's it. And
Okay.
so they do a lot of connective software stuff. A lot of what you've seen is in fashion right now in terms of investing. These stocks have done arguably the best out of any sector in the market, and it looks like they're continuing to go up because there's some real long-term legs into this technological adoption that could end up playing out over the next 5 to 10 years. Like Facebook said, they're planning to have 50% of their workforce be remote within the next 5 to 10 years, and that's really impactful for these software stocks, and it makes them even more essential than they were before. So I was kind of on the edge as to why are these stocks going up so much. Like they're already trading at high valuations to begin with, at the start of the month, and now they've just pushed it to an extreme. And it wasn't till today that I kind of realized, okay, people are really buying it for 5 to 10 years down the road because they see these as very essential infrastructure software names that will end up becoming the bridges of business in general, business and employment in general. And so when looking at these stocks, you'll see a lot of them have crazy PEs and all this stuff. And I think this market has taught us to kind of ignore that and focus more on the growth rates for at least we get 1 to 2 years down the line. I don't know if we get 5-year growth rates, but just to focus on that. And that seems to be how you can pick out the better winners and losers, at least in this market.
Yeah. And that's a great point that you mentioned about people maybe buying and picking up these stocks for the 5-10 year time horizons. And even though they are, so overvalued at present moment, it just goes to show the resilience of the average investor who's looking at especially sectors like tech, maybe AI or cloud. They're thinking that, all right, well, if I don't buy into things like JCPenney or Macy's or all these brick and mortar stores or even other industries that may not be doing so well, where can I put my money now? Where not only is it going to get yield even on the more smaller time frames like the next few weeks, the next few months, but it will do well overall over the next 5 to 10 years. The one thing I think that kind of scares me is I was looking at this data from Charles Schwab and E-Trade and Robinhood that there is now far more involvement from retail traders than there ever has been for the last several years. Because I think people are kind of just sitting at home and bored. And, one of the famous example is that there's this guy, Dave Portnoy. He's this dude from Barstools. Let me see.
Oh
here.
yeah, I like that dude.
Yeah.
He's funny.
So, the funny thing is, like, he was a guy who used to bet on sports, like NBA and baseball and football. But now he's been so bored out of his mind that he had to go over to the stock realm to realize, like, okay, well, maybe this is kind of something similar. I can bet on companies. I could bet on CEOs and management and whatnot. And he's down, I think, $18 million on his account. It was like a screenshot that someone took in his live stream. And it just goes to show that, like, there's so many people who are never involved in the stock market, now really want to get back in. Even some of my friends from college, they're like, hey, should I start buying, United Airlines or Delta or Caribbean Airlines because they're down so much? Or, when a couple of weeks ago when we had that big crash in oil, a lot of people started talking about picking up oil ETFs. So do you worry about the overall, very aggressively bullish sentiment of the average retailer thinking that, all right, the market looks like it's just going to go up. We're just going to keep, going along on it?
That's a great question. And up until very recent, I want to say till yesterday, I really did get worried about how many people were telling me, what should I buy? Like, I want to buy right now. What can I buy? It was people, rich people, people who didn't have money. You know, I talked to a lot of people and everyone was just saying, when can I buy? No one was asking, should I sell now? But the thing that changed my mind was when I saw and really studied how well the top 10 holdings of retail investors have done. And a lot of them, like, I see why they are holding on to it because they haven't made any money in them. If you look at it, the airlines have been the number one sector that these retailers have been piling into, and they haven't done anything. And so, what's the
Yeah.
classic thing? People are just going to hold on and not sell because they really feel like they're getting it at that basement value. So for me, yeah, I'm kind of thinking to myself, okay, there's a lot of retail activity, but it seems to be only in a specific sector. So for now, I kind of want to stay away from the airlines or you know, maybe even some of the oil plays. I don't know how, I don't think oil is in the top 10. I know Tesla was, and a lot of the airlines and Boeing was in the top 10 holdings, but I kind of want to stay away from those trades because those are going to be the crowded trades and the ones that I think will not have that much success because so many people are betting on them.
Yeah. Oh, this week, I think you mentioned a couple stocks. Where was it? Stock of the day or stock alerts?
For which one? Oh, yeah, Info. Are you talking about Infi?
Yeah. I think Infi.
Yeah, Infi has done awesome. I think you guys, I think I talked about it in the video 2 weeks ago. I was really big on Infi because of the new products that they put out, their data center products that really did some amazing things for data centers in terms of energy capacity and performance. And you know, I was really high. I've managed to get this stock on a really rare pullback after its earnings jump. And I told people to buy it, I think 104.20. It's at one, what's it at now? It was up good
Uh,
today.
yeah. I think I saw it. Whoops, wrong one.
IPHS.
118.
Got it literally right on that dip. You could have bought it. I don't even know what moving average that was, but hell, you could have gotten it there. And you know, we've just rode that thing. And I told people, I was like, I'm surprised this stock, even though it's up so much for the year, I'm surprised it's not up even more. It's growing
Yeah.
at a phenomenal rate. And not only that, the news that we got from Nvidia regarding their data center business paints the picture in an even more, you know, enticing way. And I think before the before we wrapped up our video yesterday, I talked a little bit about this data center REIT, DLR, and I said it really looked interesting. And based off the NVIDIA data, I was like, okay, data centers are still one of the fastest growing segments in the economy today. And so DLR today jumped up like 4%. So it ended up being a really good day for REITs and especially for the stock centered around data centers. So those two picks continue to be. I'm not in DLR. I try to get in today, but it just didn't come down to my price. Hopefully the market can sell off on Tuesday and I can get in. But those two stocks, because they're in the data center sector, I think you got to bet on them because that industry just looks so good in terms of growth and capacity.
Yeah, and I just want to let our viewers know right now. Yesterday, you did mention DLR in the live stream, and you've been talking about Infi, as you said, the last couple of weeks. So on the Advantage side, for those of you who are watching, not part of the Advantage, make sure you come join. Hit the thumbs up, or go to our website cryptosomniac.com, hit the products page right there, and join the Advantage membership because Facile puts out these alerts as well as stock of the day every single day because he's very um, very good at looking at the market and trying to figure out the diamonds in the rough, the hidden gems, and present it to the community of um, potential stocks that you can look at for the short term or the long term. And again, though we cannot provide investment advice, and he does his best to let people know exactly where you can potentially get in terms of entry points, maybe stops, maybe even exit or targets. So make sure you hit the thumbs up. Make sure you join the Advantage community. Let's continue to some of the other things that you're looking at in the market, Facile. Yesterday we spoke about housing as well. Any update on housing today?
Man, housing continues to look like one of the best sectors right now in terms of performance and value. It just, in my opinion, it has not gone up enough with where the industry is. Like, I get the initial fear. The initial numbers when the shock came out was the housing industry just completely stopped in terms of demand and supply. Like no one wanted to sell and no one wanted to buy. Then it started to creep up a little bit faster than usual when the Zillow CEO kind of said we were seeing some really good activity. I think it was late March or something like that. And that was really surprising considering we were all still in a fear state. But then I also had a friend who was trying to find a house, and she said she was, liking all these houses, and then within a couple days they were getting picked up and contracted, and there wasn't even that much of a price drop. And so I started to see that and wonder, okay, maybe the housing industry is a little bit better than a 50% drop like the stocks indicated. Like, I mean, the sector ITB dropped literally 50%. It was one of the worst hit sectors, and yet the housing data that's coming out now is actually really good. So I think these stocks definitely have a little bit more juice to the upside. I've talked about PHM, DHI is another one I really like. Toll Brothers is good. Lennar has some partnership with Amazon that seems to be interesting in 3-4 years down the line. So this space really is one to watch as the housing data improves. I will say for this week upcoming though, I really liked where the healthcare sector closed. They've taken a beating for about a week and a half. A lot of these stocks in the medical device space, the pharmaceutical space.
What's the ETF for healthcare?
XLV. That's just the broad general ETF. IHI is for medical devices, and then I think I look at PJP for pharmaceuticals. You can look XLV is fine if you just want to make it simple, but any of those sectors, even the insurers, the United Healths and the CNCs, all of them kind of close similarly above their support levels. And usually when I see that happen, that's an indication that, okay, this sector is due for volatility. Now, I want to remind y'all, I was wrong, I want to say 3 weeks ago when I saw this same type of pattern in the financials, and they ended up literally breaking down the next week. And I was like, okay, I see the signs that indicate volatility, but obviously I don't know which direction it's going to go, but I'm always willing to bet on volatility because that's just the type of trader I am. So I got some calls in Bristol Myers. It's one of my favorite pharmaceutical stocks. They're growing exceptionally well this year and next year. Or I'm sorry, I don't think they're growing this year that much. I think next year the growth rates are fantastic, like 30-40%. I think they're still growing revenue this year though. But either way, the stock I think is very undervalued. I think it's definitely like a $75 stock at least. So I bought some calls in that stock, just 3-week calls, just to play off that volatility. So like
which one was that?
BMY. Yeah, so you see it kind of hit the top end of its resistance, not necessarily where the all-time highs were before, but it hit its second level of resistance, pulled back. Looks like it's holding on, and because of what I see in the entire sector, I'm willing to bet that, okay, the fundamentals look great, technicals are holding up. Now, if the volatility is right, that's exactly what I want to play. So I bought some cheap calls, and hopefully that can play out well within the next 3 weeks.
Yeah. So nowadays, how do you see the volatility plays in options? Because I know you're a big options guy. How have you seen the volatility, in terms of affecting options up or down?
Well, it's much better than it was a couple weeks ago, a month ago when the market dropped, because the way options are priced, there's like a formula. I forgot what Black-Scholes formula. I think that's what it's called. And basically what it is it gives you the components of what makes up an option price. Obviously the stock prices is a factor, time is a factor, and volatility is a factor. So when you have a very high spike in volatility, which we saw when the market drew down so much, it really prices in, it adds so much premium into the options because now it's pricing in that same volatility to the upside that it kind of had to the downside. But as we know, and definitely as I know as an options trader, there was so much more volatility to the downside than there is to the upside. So naturally, if you're going to buy, even at the lows, you are really even overpaying. Even if you think the stock is going to have, going to make a low from there and bounce up, it probably won't bounce up to the degree that the option price is pricing in. It's really lucky. It'll be really lucky if it does, but it probably won't, in my opinion. So right now, uh, the health of the volatility is good. You can definitely buy options for months, 2 months, 3 months out, and not pay too much premiums. Um, I would just say, just try and keep it. It is still relatively high. I would try to buy options if you like to buy a month, 2, 3 months out. Buy options in the stocks that have reported, like they reported a week ago, because usually after an earnings or once the stock reports its earnings, the volatility drops because obviously people were betting on the premium
Yeah.
for the volatility spike related to the earnings, and so once that premium is out of the stock, you can really get some good cheap options if you're looking down the line, 2, 3 months out.
Yeah. Yeah, that's a really good point. So looking 2 or 3 months out, probably you'll still get decent premiums in terms of decent pricing on premiums for your options, and then looking out for options for companies that have already had their earnings. So I hope our viewers are actually paying attention to that, because this is really good information from someone who actually trades options more frequently than a lot of people. Um, Now, the
I
other
do I
thing
do
that
have
we're
to say though, I just real quick, you guys should really factor in your own thesis of the market in terms of how far you want to go in. Like I don't normally, if you guys have seen my option calls, they're really short-term time frames because I really don't like the market right now. It hasn't given too much direction. So I haven't been willing to buy options 2 to 3 months down the line because I really do think there's going to be a pullback within that time.
yeah,
And once there is, those options are going to be tough to meet within that 2 to 3 month span, probably, unless you
yeah,
have a really great stock like a Microsoft or something that can bounce back even after that. But just keep that in mind.
yeah. And again, so Bristol Myers Squibb, for those of you who are watching right now, here's a free alert that Facile put out to the Advantage community just today. And this is the kind of information that we put out on a daily basis. And we're really grateful, for someone who actually looks at the market on a day-to-day basis, especially in a complex instrument like options, for Facile to sort of give out this alert. Because last time I think you put out an options alert, I think it yielded like 1,000% or something, right?
Yeah,
Which one
it
was
was my
that?
Raytheon call. It really did well. I saw the opportunity in terms of volatility, and I made about 1,100% in 2 or 3 days. I think
Yeah,
so. It was just, I got lucky on the rally that happened Monday, but obviously the stock was in a great place. It rallied 10% on Monday. I would just The reason why I got into it was just way too oversold in my opinion, and I saw the short term factors that allowed me to get into it. But yeah, I'm not perfect because those XLF calls that I did before, those have really run pretty much to zero. And it's been
yeah,
tough to kind of deal with that because I really like the financial sector and I bought it before when I saw the same volatility trade that I'm seeing now. But that's kind of how I mitigated the risk because I still wasn't willing to buy stock in JP Morgan or Citi or some of my favorite financial names, but I was more willing to play the volatility in terms of buying really cheap options. But unfortunately, they ended up completely collapsing. And unless there's a really good week coming up this week, then they're probably going to end up, being worth nothing. So keep that in mind. Like, there's a reason why I like to choose very cheap options because your cost to play that volatility is very low. And so that's the ultimate thing. You can use these as vehicles for if you are unsure about what's going to happen, but you still think there's going to be volatility in the near term, then I would use those options. So it's a hit or miss game. Like I'm very good in options, but there are some mistakes that I make like that XLF. I gotta just say that.
yeah. No, I mean, listen, I think admitting your mistakes, or any trader's mistakes, is the one thing that makes us better.
Oh yeah,
I
it's key. Yeah.
Yeah, and you have to, right? Unless you actually accept where you are as a trader, you can never get better, because if you don't fully accept your flaws and your faults, you'll keep making the same mistakes and pretty much bleed out your capital, at some point. Um, it's funny you say that, because I wanted to dial back to the financials. See, I've actually been obviously, I've been more so of a bear in this entire run, which hasn't really cost me a whole lot, but it's kind of left me on the sidelines more often than not. So it's actually the plays that I've been making are more so high volatility plays, and the S&P 500 hitting key resistance levels, and me, buying some quick and cheap puts in the market. And I think I showed you guys a couple weeks ago, or just about a week ago. I think we made some great plays at this particular put for May 18th, which was a 360% play, and then the following week after that, I had a drawdown of I think like 79% in the next option play that I had for a put. Now, the reason why I want to bring up financials is because the one thing that I've looked up in terms of banking data, as well as XLF and financials in general, is I kind of have been looking at anecdotes of how uh, the banking sector did in 2008, 2009 financial crisis, as well as how the Eurozone did in 2004, 2005, when they went heavily into their total QE program. And in both cases, financials and banks did not do so well in that time. While in this particular time, what we're seeing is tech, high growth, and even some healthcare or biotech stocks are doing great, but financials and banks are still kind of just like sitting down there, because I think there's possibly still uncertain about how things are going to get back properly in the economy. Maybe they're factoring in credit delinquencies, maybe mortgage issues, maybe lending issues. And so the one play that I made, which is still going well so far, actually is Wells Fargo. And I've been short on Wells Fargo since I think like maybe over here and over here. So it's been about maybe 3 or 4 days of, or actually a good week of holding Wells Fargo as a short. And I still don't believe that banks like Wells Fargo or JP Morgan Chase are going to start breaking out anytime soon, until we actually start resolving things in the economy, until we start figuring out how to get the economy back up and running again, and maybe even figuring out a vaccine. So, counter to your point about financials, if we had put our heads together, we would have both gotten financials right, and we would have gotten your Raytheon call right. So net, we'd just be in positive completely.
Yeah, I mean, 1,000% gain makes up for pretty much everything that I lost on the XLF call. That's the key thing with options. It's all about how much you allocate to each trade.
Yeah.
That is the key in my opinion. It's not about putting all in one, even though it's cheap. It's just you put a little bit at a time. Like for this BMY position, I only have 8 calls just to start off, and I think I want to keep it low to start off, because Monday is a holiday, and I still don't know if the premium will be discounted even more on Tuesday or Wednesday. So my initial position is very small. I mean, it's like around $100.
Yeah.
So keep that in mind. That's the key to being successful in options. It's all about capital allocation, because you can get, like I said, you can get 1,000%, or your stuff can go to zero. But when you get that 1,000%, it covers everything. And so
Yeah.
even if you can get 200-300%, like I think a lot of my option trades do, it'll end up becoming a lot better. So just keep an eye on capital allocation and how you put money to use in the options market, because it's very volatile.
Yeah, that's a great point. I think options plays, even for myself, I think what I like to do is when I know that I'm fairly confident about a key resistance level. And again, the market could obviously do anything that it wants to, but in this particular play right here, this kind of your technical double top, this is where I started to increase my position into the option that I took a couple weeks ago, because I was fairly confident that, okay, well, this is a resistance level. If we smash up through it, I'll close it, but I kept adding onto my position, like 100 here, 500 here, 1,000 here. And then once I started seeing more progress to the downside, then I added even heavily. Now, what I want to ask you is, when it comes to sizing, right, is there, because a lot of, traders or members of ours, something that they deal with often is, I think they enter too heavily in the wrong trade, and then in the right trade, they size down too much. How do you gauge, as like a formula of, like how much do you want to size in with a trade, or do you have just like a specific, amount of, okay, I'm always going to go in with X percent of my portfolio into this trade?
Yeah, that's a great question. In terms of options, I kind of have a starting position, and then I usually, if it stays within my technical contention, I'll even buy more, even if the price gets cut in by 33% or 50% even. I have that much confidence in my technicals, and usually ends up working out. But there's not really a certain amount that I'm trying to allocate to that. In terms of stock, uh, I do like to buy. You buy half your position at your initial target, and then you kind of wait till the end of the day to see how it closed out. Then you buy a little bit more, and then you wait till, I want to say, 2 or 3 days later to see how the stock's trading up, and then you finally complete your position. It's all about not doing everything at once, in my opinion. That's what I've learned. It really helps to break things down as a way to mitigate risk.
Yeah. And obviously risk mitigation, especially in financial markets, is the number one key because, you know, uh, I've always talked about how the first rule in trading is obviously kind of like Fight Club is, um, you know, risk as little of your capital as possible when you're uncertain about a trade. Okay, so capital preservation obviously is the number one rule. Okay, number two is then being able to grow your capital. So unless you actually can follow rule number one, which is being able to manage your risk, being able to preserve your capital, you can never get to that rule number two. you know and I
Mhm.
think a lot of members in our community, they come kind of hobbled from other places, or trying to test out the markets on their own, and say that, well, I thought I was a good trader, but then eventually I realized like the market kind of bled me out and rode me down to zero. Couple of the reasons why is because they're unable to cut their um, cut their losses short. So do you have any, I guess, piece of advice to give to people when it comes to seeing a losing position, um, when it comes to a losing position in their trade? Like, how do you cope with that?
Oh yeah. Well, to start off, I've had so many times where I've bought something and it's just like not done what I thought it would do at that price, even though I was so confident going in. You have to you It's not about like whether or not a stock closes above a certain price. I like to deal with things in ranges. So if I have a support or resistance level, I usually like to say, okay, if I don't want it to break above like 185, I definitely, if it starts closing above, or I'm sorry, it starts closing below like 184, 80, 70, 60, and it really kind of confirms that it's breaking away from that initial point, then I'm going to make the decision to say, okay, that's when I'm going to cut my losses. But it's all about sticking to discipline and finding out a strategy that really works for the timeline of your trades. I like to be a little bit more precise, so my areas are pretty tight. But if you're a long-term investor, you can find ways to mitigate risk just by using either a moving average or a couple moving averages, high and low ranges. There are multiple ways. You just got to understand what type of trade you're in and what you're kind of looking to get out of it.
Yeah, yeah. Actually, I did a trading strategies tip for people a couple weeks ago, and I just told them that one of the simple rule of bullish and bearish flips on moving averages are, I use a 20 EMA and the 40 EMA in tangent together, and I show people how any time frame, you can use this on any time frame, and you could use this simple trading strategy as the bullish crosses are the lower moving average above the higher moving average, so 20 above the 40, so green above the red. And you can see that when this made its bullish cross right here, so right around this point, okay, this was your area to potentially go long, okay? And you
Mhm.
don't flip short technically till over here when it made that cross, when it made that flip, right? Or even over here, actually, it made a small flip of the moving average, right? So it's a quick and easy strategy. Like from here to here, you make 1.3%, okay? Or if, again, you got out of here and you re-entered right here, right? Again, there's your bullish flip, and then your bearish flip right there, 0.65%. Just an easy strategy that we laid out for our advantage members, because it's very hard for everyone to look at the market in the same way you and I do, of understanding, what's happening behind the fundamentals, what's happening behind the technicals of, ranges or trend lines or overbought or oversold levels. And I think identifying these simple ways of looking at, bullish or bearish flips in terms of just simple moving averages. Of course, you got to understand what's happening in the overall trend. I think that these are the things that I really hope to show our members on a day-to-day basis, because that's ultimately what's useful in this market, is when you can do things on your own and you could start at least not losing money, or you could start making some money, So I think that's one thing that we do really well in our community. And I'm glad we have someone like you to explain what you see in the market on a day-to-day basis.
Yeah.
So to wrap this up, I wanted to give the members something to take away for the weekend and for the week ahead. So going into the weekend, I think you had said that sometimes, on Saturdays or Sundays, you'll do some research here and there on companies, or you'll write out your newsletter. What are things that you're looking forward to the week ahead in terms of markets, and any tip that you can give in terms of a stock that you're looking out for, let's just say Tuesday market open?
Yeah, sure. Just real quick, I want to touch on I guess it's different when you're looking at stocks versus crypto, but there's a lot of emphasis in my technicals that are backed by fundamental research. Like, I will never get into a stock that I don't like the fundamentals on. That is at the core of believing whether or not my support or resistance levels will end up holding or whatever. I just wanted to make that clear. Like, if I put out an alert, it is usually because I really agree with the fact that the fundamentals should support the overall movement that I'm betting on. And even more so, that the support levels that I'm anticipating it to hold, that's where I expect there to be buyers, because there is fundamental value in the stock and it should be trading at a higher level. I just wanted to give you guys that take. I think it's different than on crypto because there's not really much fundamentally driven momentum per se.
Oh yeah, you're totally right. I mean, I just wanted to expand upon that, and I really credit your research that you do before you put on alert, because it's not just hey, I'm buying this stock here and selling it here. You go through an in-depth analysis of a company, and you lay out a multitude of reasons why you're thinking about picking up this stock, or why you're thinking about shorting it or longing it or whatever you're doing.
Mm-hmm.
And I think that just goes to show the amount of research and time you put into each position. And, to be honest, you're absolutely right. There's literally zero information when it comes to crypto about why, something is fundamentally moving. To be honest, it's a lot of hocus pocus, right? Like, there's not a whole lot of going on in the crypto markets, especially in altcoins, which are anything other than Bitcoin. There's even less so. It's actually become such a Ponzi scheme in terms of altcoins, because there are so many bigger players or algos that are driving the market up and down, just based on some of the more supply and demand based indicators that they have. You can literally see. So, for example, one of our members asked about this stock right here, or this crypto right here, Omise Go. I think it's like a Thai or a Malaysian company. And, again, for the last several years, I mean, it hasn't done anything.
Damn.
Literally nothing, And so it's been in a drawdown mode for 2 or 3 years. And I think what happens often is when people see, big green candles like this, they start buying over here. But in reality, what they don't realize is, holy crap, we're down almost still. Even if you took it from this high right here, you're still down 94%, right? So if you buy here, you're effectively buying the top. I mean, because you don't really know if this thing is going to keep trending up. All you did see is this, one big, large green candle. And this is why I've been telling people in the crypto community, if you really want to preserve your capital, or you want to grow your discipline as a trader, stay away from altcoins like this, because this is just garbage. Like, these companies are supposed to go to zero at some point. What you're really doing is you're hoping on the intraday movements here and there to make yourself, 10, 50, 100%. And for the most part, it's not really going to happen, because unless you bought somewhere near the bottom, you're effectively buying the top. And so there's no technical reasoning why things are actually going up. It's just going up because there's some bots out there who are just clearing up, whether it's short liquidations or whether they're going through just a exodus of lack of demand, and they see the market is easier in terms of the order book on the way up. There's literally no reasoning for why these quote unquote companies are going up. So this is why I want people to be very careful of when they invest into these altcoins, because to me they're pretty much worthless. Like they actually should be worth zero. The only thing that should actually be worth something is probably Bitcoin and Ethereum, maybe a few other companies that I don't really know of. But you're absolutely right when it comes to technical versus fundamentals, because the only thing that we look forward to, and you've seen my analysis before, all I discuss is technicals in our crypto analysis, because there's nothing more to discuss. The only large event that we had in crypto is the halving event, which is a supply depletion event where the halving, it's like, so say for example, if someone went into a gold mine, every single week or every single year, and they found 10 ounces of gold, and then somehow some entity out there just said that, hey, from now on, every cave, every mining facility that you go into, you will only find half the amount of gold that you were able to mine. It's a very unique feature, deflationary feature of Bitcoin, and that's why I love Bitcoin. But that's the only event that really matters, which is that huge supply cut. Aside from that, it's all technicals. It's all like SR levels or overbought and oversold levels. So with the long drawn out point, what I'm trying to say is I really admire your time and dedication that you have to doing your research about specific companies, because it is really admirable.
Oh, thank you. I appreciate that. No, I did. I'd have a small question about it because I don't keep up with Bitcoin that much. But when the cutting of the supply happened, what happened to the price? Does that mean the price automatically jumps up by double because you cut the supply, or how was that news? Or was that news like priced in beforehand, like it would be kind of a stock?
I mean, I think the news was definitely priced in, because here's when the actual supply cut happened. Or was it? I think it was like on maybe this day. Correct me if I'm wrong. I think whoever is watching this video right now, I think it was around this day or this day is when the supply cut happened. Okay. So yes, we hit this high around 10,085, just about maybe 4 or 5 days before, and then we never reached up towards that high, and we started rolling back over. And obviously, prior to that, we've had big run-ups towards that, what's it called, Bitcoin halving event. But the thing is, just like Bitcoin ran up this much, so did the stock market. So it's like very interesting that it just so happened to be that the stock market as well as Bitcoin's halving event, pretty much came right at the top. I just found that really, really interesting.
Yeah, no, I think it's interesting because like what you've seen with all the high growth stocks, a lot of these, the big reason they've gone up so much is because they're going to be part of the next wave of infrastructure and technology. So it's really interesting to kind of see Bitcoin follow in that same uptrend. Obviously, it hasn't broken out, but at least I think there may be some of that same momentum that carry those software stocks. It may be also into Bitcoin too, because both of them are high risk assets, but both of them are following the theme of they could be game changing technologies within the next 5 to 10 years.
Yeah, exactly. And I think blockchain will definitely have its place in society, and I think it's gonna do some amazing things in the next 5 years. But I think Bitcoin and many of these assets still have a lot to prove when it comes to adoption, like real adoption of actual usage and utility. And it just doesn't seem to be the case right now. This is why I kind of went back to the drawing board. I did this big analysis of how I still see Bitcoin to want to drop some more, maybe back towards like $1,000 or $2,000. And here's some of the reasoning why. So I'll give people like a brief synopsis of what I was looking at. Look up this thing right here. So I drew this big, pitchfork, and this is like a shift pitchfork, which is a big sort of technicals, trending overlay. And the one thing that I noticed is, if you look at this level right here, 10,584, right? We hit that level around October 2019. And and I want you to comment on this too after. We hit this level in October 2019. Then we came back to it again in February, fell, I think, about $30, $40 short, sold off aggressively, went all the way down to like 3,600. Now we're coming back towards that same level again. Again, not able to even get towards that level, and not even close to smashing through it. So my proposition is, I think Bitcoin is probably going to have to go down lower and maybe look lower for liquidity, spend some time down here, maybe start building out its tech, actually figuring out, hey, is Bitcoin something that is actually going to be widely adopted, or is this just a failed experiment? And at least for that to happen, I think price needs to come down here further, maybe $2,000, maybe $1,000, and maybe start its climb back up in the next year or two. So when you look at something like this on a technical time frame, how do you look at this aside from just ignoring the fundamentals?
Just on a technical basis, yeah, I could definitely see there's resistance right here that it's dealing with. Even though it's not at that black line, it's kind of in that same resistance range. So it's no surprise why it hasn't kind of gotten up to that specific point. But I think it's going to be a prove it week, maybe 1 or 2 weeks for this the asset. If it starts to make a lower low on a weekly basis next week or even the week after, I think you could probably see this asset pull back. I don't know the degree that it would pull back though, because at the same time, it's kind of gone up with the stock market, correct?
Well, technically it bottomed out before the stock market, and it actually started climbing before the stock market did. So in a way, I think I've told you this before, sometimes Bitcoin, due to its high risk nature or its low liquidity nature, I think it actually leads the market sometimes. Just like I told you, right around February, Bitcoin actually started selling off maybe about 5 days before the stock market.
Mm-hmm.
So just something to keep in mind.
Yeah. So I'm just wondering how that dynamic plays into it, because if the market ends up continuing to go upwards, I wonder if that momentum carries over into Bitcoin.
Yeah, I mean, I think it's very possible. I think if equities are actually going to start breaking out above its 3,000 level or something,
Mm-hmm.
I would probably figure Bitcoin goes up a little bit higher. But I still think that this area is a tough area to deal with, and I don't quite know if we're ready to break through it just yet. Especially because I'm still a bear on the stock market. I still think that we're probably going to have at least another leg down. I don't know what's going to trigger it off, whether it's this whole China news event or whether it's just, hey, we've made, 8 straight weeks of upside movement, no real pullback. I mean, maybe we need a retracement back down. Or I don't know what it's going to be, but that's what I'm thinking. That's the one way I could see equities pulling back, Bitcoin pulling back as well.
Yeah, I totally agree with you.
Yeah. Well, I'm going to wrap up this session here, Facile. Thank you so much for joining us, man. I appreciate your insight. For those of you who are watching this stream,
I think you cut out at the end.
please hit the thumbs up. Make sure you subscribe and go to Advantage membership, where you can get Facile's stock of the day, stock alerts, and you can be shorting Bitcoin with us instead of being long and being in a losing position. All right. Hope you guys have a good rest of your weekend. Happy Friday and happy Memorial Day for those of you guys who are in the US. All right. Take care. Cheers. And again, hit the thumbs up.